Good evening, everyone. A very warm welcome to a live webinar on Neobanks, reframing the way banks and customer interact. I have esteemed panel today with me, Zein Malhas, who is the Chief Digital Officer at Capital Bank, Jordan. Zein comes with 16 years of banking, corporate banking, transaction banking experience, and multiple organizations, Standard Chartered, HBTF, and is now CDO at Jordan and Iraq operations for Capital Bank. And she is building one of the first neobank at Jordan. We have with us Olivier Crespin. Olivier is a very well-known name in the industry with 30 plus years of experience. And while most of us have heard of the digital banks, Olivier has built twice digital bank, first at DBS, where he built DigiBank, and then at Zand over the last 3 years, he's building one of the first challenger bank. So he's a CEO and co-founder for Zand. Olivier comes with multiple years of experience at Citi, BNP, and multiple large global banks, and he's innovating on what we see as the next generation banking. We also have with us Raheel, who is managing partner and board member on multiple fintech entities. Raheel again comes with close to 3 decades of experience, and he is an innovator in building digital banks. He built a very interesting platform called DigiBank, which is enabling multiple digital banks. And my name is Chetan Parekh. I'm the partner at Cedar Consulting. I've been again fortunate over the last 2 decades to build one of the first digital bank in the Middle East called MENA in Saudi Arabia. So today we are going to be looking at reframing the way customer and banks are going to interact. Let's first look at what do we believe are some of the key drivers, and let me have an audience poll. So I've launched a poll. I hope everybody can see it. And we have about 30 seconds to vote. What, according to you, is the biggest driver in MENA's neo-banking phenomenon? And your answer options are supportive regulatory framework, rapidly evolving customer experience, and emergence of open banking ecosystem, and better availability of capital and funding, or a large unbanked or underbanked population. So may I request people to vote? Interesting. So moving further, Raheel, may I invite you to take us through what you've seen as it takes to build a digital bank?
Thank you, Chetan. First of all, thank you to all our panelists today for coming on to this exciting panel where we would be discussing the neo-banking industry, how neobanks are reframing the overall landscape of banking, and how do we interact with customers. So I'm very grateful to both of my panelists, Zein and Olivier, for coming onto this panel with us. So today what we will do is we'll try to keep the conversation very much alive in terms of understanding and seeing from your perspective how your journey has been with the building of the digital banks in the region, your experiences, how you see the market, how the overall outlook looks like. What I'll do is I'll just quickly take the participants today through some insights of the MENA and how neobanking is changing the landscape overall. So just a quick background on Codebase Technologies. Codebase is a global open API banking solution provider. We're working with large financial institutions, both conventional, Islamic, traditional institutions, helping them go digital, as well as working with the fintech ecosystem and developing neobanks proposition in the market. We are present over 4 continents with our head office in UAE and regional offices across the 3 regions with our innovative DigiBank product, which is a bank in a box model solution, helping neo challenger banks basically go live in rapid time. So today, what we see neo challenger banks around the world, successful ones, unsuccessful ones, and you can see even the MENA region is now picking up the whole aspect. We've been proud, and we've been associated with 3 of the MENA regions neobank proposition over here as Codebase Technologies, and we see different kind of models, different kind of institutions coming up from fintech startups, from banking background, traditional banks opening up their digital arms as well in the region as well as outside the region. We see a huge influx of customers selecting new challenger banks as even their primary banks to bank with. So they are all around the world now. They are a household name, from the names of Monzos, the Revoluts, from Sophie, for Movin, and so forth. So we've seen a huge growth, of course, led by US, Europe, UK as the key drivers of this model institutions. And now the MENA region is fast picking up, and we're seeing very much innovative challenger institutions coming with great proposition in the market. So it has been identified that 38% of the traditional bank's revenue is at risk, and it will be eaten up by neobanks and digital disruptive fintechs by 2025. So it's a huge area, a huge opportunity, which traditional banks are at risk of losing that space of their very comfortable revenue. And these institutions, the new challenger institutions, are actually eyeing, and they have already proven themselves in different markets where they have completely disrupted bit by bit of the traditional banking segments and banking products. So this is where the premise is. There's a huge opportunity, and the MENA market is completely right for that. So the difference between, as we know, between neobanks and traditional banks is the traditional banks, as we've seen, they have been established over the last 100 years. They focus on a long in-person relationship, highly complex structures, fees. They prefer to have bank branches, and they have a very long, tedious legacy process. Whereas the neobanks are completely mobile or web first. So they are digital first. They have a digital mindset, not just as a bank, but as people working in the bank as well. They've been fairly new in the industry, just around 10 to 15 years, but they're very flexible. They've been able to democratize every element of the banking sector. Their fee structures are very low and transparent, and they believe that the institution should be servicing the customer's needs rather than forcing them what they want to sell to their customers. And they're all based on the premise that customer comes first. And they believe in the digital proposition of delivering any of the banking services completely with their security of the products, of the platforms, at the fingertips of their customers at any time, anywhere. There are 3 types of neobanks, what we've seen as a business model. Neobanks who are purely digital, who may not be regulated as a bank, but they start off with a digital proposition. They would not have any banking per se, the commercial banking license, but they operate under separate licenses with their partner institutions, sponsored by a traditional bank or sponsored by a electronic money monetary institution. So they have complete online presence only, and their key services and focus is how they can make payments faster, easier, cheaper, using cards and mobile interfaces. Then we have the challenger banks who are regulated as a bank. They have a full license of a bank to run a full digital operations. They're still considered smaller sizes as compared to large mammoth traditional banks, but they're picking up their space very fast. They're very similar to from a regulatory perspective, they follow the same regulation, but they still focus on changing the customer experience, across the entire banking spectrum, be it accounts, be it deposit, be it loans, corporate or retail. And they also focus on ensuring that the base transaction services of what we offer to customers is seamless, it's digital, and it's not the same way how you do it at a traditional mobile banking app. And then we have payment banks. Payment banks have a separate licensing requirement. They do offer both physical as well as digital presence. So they have some sort of a physical requirement due to regulatory requirements. And they have been operating in the Asia region primarily, where the regulators wanted certain features to be available and support available on physical network. But they're also traditionally digital first, digital mindset, and servicing the customers through the digital option, digital means, issuing loans, being a financing companies or credit cards, or even banking services. So why, we ask the question, why are neobanks winning all these customers? What is there that what traditional banks are not doing, or what they've not been doing today, and what neobanks are picking up as their opportunity? So the overall situation today is that easy to use. It's not someone who needs to explain them how to use their mobile banking app. As like in a traditional environment, customers get bogged down, they don't understand how to even make a simple transfer. They want to open their bank account easily without going to a branch. And during the pandemic, the entire landscape changed. No one was able to go to branches. So what do we do? So the preference of customers being able to open a bank account and service and get the service they want right at their fingertips at their homes was actually one of the key major reason people start choosing challenger institutions. And we've seen that across this, all age groups have been aligned to this requirement. It's not just the Gen Z or the millennials, but it's across the market, or the segmentation is looking after this requirement of being easily able to use the app, or to use the mobile services, or open the bank account easily. And then of course the technology becomes very slicker. So for the Gen Zs, for the millennials, it's more important their experience. Just like we do Netflix today, we use Instagram, we use Snapchat and other social media platform, or TikTok for that matter. We want our banks to be like that, and we want to spend more time on our apps. Hence the technology as an enabler helps neobanks acquire these new customers. And they also understand that these neobanks are servicing and basically servicing a need, be it a low-cost remittance, an account, a digital account services, or even credit cards or digital cards for that matter, faster payments and so forth. So the needs of the customers are being met by these neo-challenger institutions, and that's why today they are acquiring customers at a much faster rate, and traditional banks are losing their customers at the same faster rate as well. So from a 2020 to 2025, customer base of neo-challenger banks is expected to grow with a cumulative growth rate of 45.5%, which is a huge number. And we see a huge opportunity, especially in the MENA region, which is very unique from a population perspective, from the market segmentation perspective, and we have bankable population which is being unserved. So it's not about the problem of financial inclusion only, it's also about bankable population not being serviced or not being served the right way they should be. So the customer base is expected to grow at a much faster rate than the traditional industry expects. So how are we building tomorrow's banks? So we're helping institutions like the likes of Zand and Capital and Kuwait Finance House on building digital first, digital driven, digitally mindset based institutions. And what we see as a new paradigm shift is people want everything mobile. No one even wants to open their laptops today. Everything has to be on their fingertips. They always want to be connected. They want everything real time and hyper personalized. They want it at their convenience, not at the bank's convenience. And they feel, and what the challenge is today, how do we utilize all of that data available to us as banks, and how can we hyper personalize propositions for our customers using all of that data? Today, the customers want full contextual engagement rather than static offers. But it all opens up a new area or a new angle to banking. Today, neo challenger banks are enhancing governance, they're enhancing risk and security. And that's where the customers are trying, and they are basically trusting these banks because of the use of technology, the use of the best practices to ensure the security is there. And they are doing a huge investment into the overall brand power, where they're showcasing that how they can protect the customer's identity, they can protect the customer's transactions, they can be much faster, they can be much more nimble, and deliver enhanced governance across the banking element. So those are certain things which we will be discussing today with our esteemed panelists, where how do they see their customer base, what led them to design and develop a digital first proposition in their markets. So over to you, Chetan, to basically take it from here and basically making it engaging with our panelists today.
Thanks, Raheel. Yeah. So I think it's a very interesting result, as you can see, of the first poll, where biggest driver, no wonder, rapidly evolving customer preference. And almost 48% of attendees believe, and we have more than 100 attendees, that rapidly evolving customer preference is a key driver. And that brings us to the next logical question, that what has shifted and why such a large change? So let me invite Zein, who's been a corporate banker, and she's building a digital bank first time in Jordan. So Zein, in your view, what do you see as a major shift in the customer preference and the need?
Thank you, Chetan, and allow me to start by thanking you for this opportunity to be on this panel with the gurus of digital, the three of you. So I'm really honored. I think in Raheel's presentation, he touched on a few drivers of this change, which we are really seeing in today's world. Some of which I would like to highlight as such as personalization, for example. A personalized experience is definitely something that is changing today. We no longer expect to have a standardized experience and the standard service or level of service. The expectations are becoming much higher. Low cost as well is something people are in sort of constantly. So many of the successful challenger and neobanks globally have actually gone with the feeless banking approach, or reducing fees as much as possible and looking to monetize in different ways, mainly with a very big focus on data. A very big key driver is, so years ago, we used to really use the word globalization, and the word itself now transformed. And now we're looking at a world where we're hearing terms for the first time, such as metaverse, for example, and we see our kids interacting with their friends on PlayStation, spending their allowances on skin in a game rather than actually spending it on something they can wear and showcase to their friends. So there's a major shift in everything that we do in how we extract value. And coupled with the fact that there is no longer loyalty towards brand because shifting costs are no longer high. So where growing up, we used to look at the bank of choice is the bank that we expect to continue banking with for the rest of our life. Today, we can simply close a bank and open another one in a digital bank from the comfort of our home in seconds. So with that and the very fast pace of the world today, all of these are drivers towards the change and the emergence of new needs that banks are actually maybe not understanding as fast as they should and not adapting to as much as they should. Meanwhile, you see neobanks, challenger banks, and fintechs jumping on such opportunities.
Very interesting. And in your understanding, do you see this, or your research, do you see this as more a millennial thing, or it's across all age segments?
It's an interesting question because depending on which perspective you take, you can answer it differently. So at the face of it, I would say it is across all segments and age groups. Because generally the world is changing and it's impacting everyone. But maybe we can argue that it is also driven by millennials and Gen Z, because if you look at our parents and grandparents who have Facebook accounts today, for example, they have it because they were taught how to use it and they were pushed to use it by their children. So on one hand, you can argue that it is being led by or driven by these Gen Zs and millennials that have new needs and that are more experimental and open to adopting new ideas and new technologies. But the world itself and the drivers that I just mentioned also impact other age groups and other segments as well.
Very interesting. Very interesting. So moving further to Olivier, I think you among all of us have seen multiple generations of digital banks. And it'll be very interesting to hear your perspective on, compared to what you saw at Digibank a few years back to what you're seeing now. How do you see this shift?
Right. Thank you, Chetan, and thank you, Raheel. It's really a pleasure to be invited to be in this panel, and also Zein. Nice seeing you again. It's really a pleasure to be here. So it's quite similar to what Zein has said, right? So I think that if you look at what people are looking for, right, when they look for a digital bank, and usually we look at the jobs to be done. So they are really, and I've done that everywhere, right? We go through a consultant who does help us to do a review in the market, and the conclusion is pretty much always the same. One is the first job to be done is to get things simple and easy, right? Is what people are expecting now. They want to be able to do a transaction in one click. They're expecting not to queue to open an account and to have to wait in a call center. So that's number one. Number two, Zein mentioned as well, personalization. They want to be recognized. People want the bank or the financial institution to know them. And this is not addressed by traditional bank. I can bet that you may have a saving account with the bank, and the day you want to ask for a mortgage, they are going to ask you, okay, by the way, who are you? Where do you work? What is your salary, etc., where they probably have all the information. But because they are not leveraging the analytics properly, they are not able to get that very visible to client. The third aspect is how you bring back to the client the best product possible, right? And for this, you need two things. You need to build a product based on clients, so it's customer-centric instead of being bank-centric. And you need to leverage your best data platform to be able to know what is going to be the most relevant, the best rate, the better price to clients. And the last point, right, and that is very important for a digital bank, is people want to have peace of mind, because we are talking about financials. So they want to make sure that if they need to get back their savings, they are going to get them back. So that kick in usually is a regulatory aspect of it, right? So if you're a digital bank with a regulator, it's hard as well on a confidence level that anybody needs to have in the bank. So it has been evolving, right, since I would say last 7 years, when I started doing a digital bank in India, Indonesia, Vietnam, and now in UAE. The technology has been evolving, and you need to be able to always be able to leverage the latest possible kind of technology you have available, right? So everything on the cloud, simple architecture, and always be able to leverage the latest to keep providing the best service to people, because the expectation is moving up as well. The last point is on generation. I tend to believe it's more a question of mindsets than generation. So you have people who are digital, you have people who are 20 years old or not very digital, you have people who are 80 years old or super digital. So it's really, obviously you have more people digital 20 years old than 80 years old, I would say. But it's really these people who are going to jump, right? I don't think if you are 60, 70 and you're digital and keen and curious and everything, you are going to be probably one of the first to jump into that. So that's my view on that.
Excellent, Olivier. Great to see your insights from a multiple geography perspective. I think it's time now to launch our second question to the users, and we have like more than 100 people as well. So let me launch the second poll. Now, in your opinion, what is the biggest factor that attracts customers and businesses to neobanks in MENA? As already highlighted by Olivier, he sees this across different markets, and he has already given his perspective. But let's hear what people have to say. Let's give them another 20 seconds to vote. Again, no surprise there. Very clearly, people in MENA believe seamless digital user experience is the single largest reason, followed by ease and faster onboarding. And that brings us to, in fact, the next interesting topic. In what do you see as unique customer trend compared to the global markets when it comes to digital banks? And again, there are lots of questions. In fact, I can see 12 plus questions already in saying, do you see traditional bank not surviving? Do you see them not equally differentiated in their approach? So I think it'll be very interesting, Raheel, to see your perspective. What do you see as unique and evolving compared to traditional banks or the global banks?
See, the traditional banks who will not evolve will actually lose out, definitely. In terms of there are progressive traditional institutions who are now moving towards digital. So there is a transformative journey happening. But when we still see a neo-challenger institution, their concept and their outlook is completely different from that traditional ones. They are still looking, traditional ones are still looking at incremental growth or incremental change, whereas the neo-challenger institutions are looking for a complete 360 disruptive change in the market. They are willing to change their processes, they're willing to change how the customer interact, and they're actually questioning each and every point of that process, which was there in a traditional bank. Some of the traditional institutions who are going through a large transformation, they're mostly digitizing their manual processes. They're not actually moving towards the right digital first approach. So that's the differentiation how we see it. However, traditional institutions are there, they are growing, but not at the same space, and they're losing out both customers, they're losing out opportunity of revenue, and they're not connected to their customers. That's the biggest challenge. Today, if I have to think that who should I bank with or who should I use, which card should I use, I have no loyalty to that bank institution. And that basically tells you that we are not connected to our banks. We are only using them because they're the only option available, perhaps, in that market or for that service, but we're not happy with it. We are underserved. What we see as a neo-challenger institutions are there to actually service the problem. So they pick up each and every problem bit by bit, even though you'll see challenger institutions only focusing on one element of the problem. They're not saying that, oh, we will change the whole thing altogether. But they're looking at piece by piece. They're trying to pick up problems and opportunities and trying to fix it from a customer standpoint. that basically differentiates them, and that's why they're actually being they can be more profitable on a longer run basis. And you'll see there are challenger institutions who have started becoming profitable in a very short span of time because of their focus of their customer base, the proposition they bring in, and they want to service the customer at the end. So in our view, the traditional banks, of course, they won't close down overnight. There's still something, they're still providing service in the market, but after pandemic, it is becoming very difficult for them to survive and to innovate and to basically change what is expected from them.
Very interesting perspective, Raheel. And again, I think it's very important to understand, while all of us know neobanks are going to grow, how do you build a neobank and what kind of challenges one faces? And there is no better person, Olivier, than to share your experience, both first time and the second time, on where did you see the challenges in building the neobank ground up, and you've built it in a very interesting way.
So I love this question, Chetan. To build a neobank, you have to build something that is not a bank. You have to build a platform. So that's the point number one. If you try to build as a bank, you are going to end up doing the same as anybody else. So you build a platform, and I always say we don't have a bank. We have a platform with a banking license. So it's really reverse, totally the way you start building. And what does that mean, right? A platform with a banking license, that means a few things. One, you don't have legacy when you start. And this legacy, technology legacy, obviously, but more important, mindset legacy. You need to think really differently. Second aspect, to build it to connect with ecosystem from day one, to be able to be there on a day-to-day life of people. You know, most of the human activity end up by a financial transaction. I think 70% of the human activity start and then in a financial transaction. So for example, to make a presentation today, I bought a suit. So it's a financial transaction, but pretty much everything we do end up in a financial transaction. So how you have built a platform that can connect with all the ecosystem where the clients are. That's really important. And they should be doing banking without even realizing they are doing banking. So the bank, the platform very present, but not very visible. The other aspect is that you need to combine two DNA. The DNA of banking, which is always around risk management, financial expertise, compliance with regulation and trust, and that you don't want to compromise at all, right? So you need to get people who are coming from this area but are ready to change, and that traditional bank do well, but they are not able to bring very well the DNA of digital, which is around customer centricity. So again, you build a product around the client and not around the bank, and traditional bank have a huge difficulty to move from there. Second aspect, better leverage analytics. And banks have analytics, but the problem is that the analytic has not been, or the data platform has not been built from day one. And it's very difficult to add analytic structured orchestration architecture after you have already a bank in place. And the third aspect is to be able to build on the latest technology possible. So everything on the cloud, so you have better time to market, you have more computing power, you need to be able to partner with fintech, with many different organizations. And for this, your organization need to be ready, or your architecture need to be ready to be able to plug and play different solutions you can bring. So that's really in a kind of a high level summary what you need to do. But I think the most important, if you want to build a neobank, don't try to build a bank.
Very, very interesting. I think it's all thinking differently. We can clearly see makes it all the difference. And when you differentiate. You build a challenger bank of repute, and it has a banking license, so it can predominantly grow and challenge some of the bigger players. But you've differentiated yourself as Zand. And where do you see the proposition difference between yourself and some of the bigger peers?
So I think a few of the elements I mentioned previously, but all these lead to a strategy that is by itself differentiating. So one I mentioned already, platform with a banking license. Second, you need to focus on where you can make a difference. And usually you can make a difference if you focus on products that can be fully digitalized only. Meaning, for example, in this market, mortgage cannot be digitalized, so we are not going to offer. But the day we can tokenize, we are going to go through it, because it's where we will be able to differentiate ourselves from most banks. The third aspect, and particularly on a corporate bank, because we are also going to launch a commercial bank, is how you can differentiate yourself by better understanding than other banks the ecosystem the SME are evolving into. So we are going to do what we call a lot of products that are ecosystem link. So we'll do, for example, ecosystem link financing. We are going to finance the SME because we understand the marketplace or the ecosystem they are evolving into. The next aspect to differentiate ourselves is to really keep supporting everything we do should support the digital agenda of UAE, for example. UAE have very big digital agenda in every area. And they understand that if in Emirates, there is no full digital bank, it's going to be very difficult for e-commerce, for ride-hailing company, or for traditional corporate who are transforming themselves to be successful in digital space. So we are going ready to connect to that. That's going to be a priority. And we believe because of the way we organize and so on, the traditional bank cannot compete into this. So really playing our strengths, which are around digital, linkage to ecosystem, and be built as a platform. And they should provide some differentiation at every level.
Very interesting. I think, again, thinking differently clearly comes out as your strategy. And again, going back to Zein, you've been building a digital bank not in so modern market, and you would be potentially the first traditional bank who would build a digital proposition. So how different is it from success factors perspective in building in a traditional bank a neobank proposition?
Actually, Chetan, by answering this question, I can actually build on Raheel's response to your question relating to what the difference is between the traditional and the neo challenger context, as well as those differentiating factors that I completely agree with Olivier on. So the difference from my perspective is that it's twofold actually. On one hand, it's because by experience, I have been a corporate banker. So I haven't been a digital person all my life. And when we were just discussing about how mindset is the key driver, and the team that's actually creating this or building this neobank need to have that mindset of not building a bank, rather a platform with a banking license, as Olivier said. It's, to me, actually a challenge every day to break free from what I would typically think of as a banker and think of myself as a consumer. So having been responsible for products in my prior life, the way we used to address products in the traditional context is to think about what other banks are doing. So it was more inward looking and more all within that banking space. So we would look at other banks launching new products and think about how we can come up with something different from what they're doing, not considering the customer, although we were always claiming to be customer-centric. What I have seen in the past 6 months that was an extremely beautiful journey we've been on, is that now I really no longer care about what other banks are doing, because I don't think of ourselves as a bank, and now I think about consumers. So adding to what Olivier was saying in terms of how you would differentiate yourself as a neobank, in our strategy, for example, we were thinking, how can we add financial literacy to what we're doing? How can we stop communicating with customers using the language of bankers and instead use something that is closer to the consumer or the SME for that matter? So instead of saying a transfer or a payment or SWIFT or all of these banking jargon, we would say send money, receive money, request money. You would be really surprised as to how many consumers don't know the difference between a debit card and a credit card. And we go on as bankers so proud competing about features in our credit card while the consumer doesn't even know what the terminology is. So this gap in communication, I think, is now being perfected and closed by fintechs and by digital banks, because they now understand that for us to become different, then we need to communicate differently, we need to engage differently, and we need to think about the consumer really, not think about what our competitors are doing. So building on that and adding to what success factors are needed to build a neobank from within a traditional bank, because we are very much still within the traditional bank, I would say a very important factor is allocation of resources and tone from the top. So you need very strong sponsors, whether your shareholders, board of directors, or CEO need to be fully subscribed and fully understanding what it needs to build a traditional bank, supporting fully, and allocating the right resources in terms of mindset and in terms of number of resources. So you cannot do this by simply allocating 2 or 3 people and saying, let's build a bank. The second key success factor, in my opinion, is technology and agility. And I put them together because they cannot be really isolated. You need very agile technology, an agile partner, and an agile setup as well. So if you intend to just just to partner with a vendor that provides you with channels, link them with your legacy infrastructure and legacy systems, you are not disrupting the way you've been doing things. Because at the end of the day, it boils down to the question of, can banks sustain without digitizing? No, as Raheel mentioned, they will probably disappear. Do they have the option not to? No. How would they go about it? It's one of 2 ways. You either become more digitally enabled, and if you can crack all of the challenges of transforming, then you can do that. Otherwise, you build a digital bank, and that's where you know that you're doing it differently. So that's just to name a few.
Very interesting, Zein. Very interesting within the traditional how to turn digital. And when you look at Olivier, the fintech ecosystem, right, which comes into the play while you set up your platform, how do you see the role of fintech and the ecosystem in helping you build what you've built?
So, we really believe that alone we cannot achieve much. And that's even, on our brand or name or logo, etc., right? We want to reflect this, right? So you can see our logo, Zand is sand, right? So when you look at every particle of sand, they are beautiful and unique. But it's when you start putting all these particles of sand together that you start being able to create something. So we don't want to build everything. So we need to decide what we want to build, what we want to buy, what we want to own, right? That's very important from day one. So what the key things we want to own is really the overall architecture, how we orchestrate things, the customer experience as well, some data components, but the rest can come from fintech. And a lot, in fact, is coming from a fintech and technology company, right? Even Codebase is a big part of it at different level. We have a fintech on PFM. We have a fintech on some security aspect. We have a fintech, in many, many areas, because we believe that we cannot, first of all, if we want to be able to offer the maximum number of opportunities to our clients, we cannot spend time building product. And we have companies who are really building one product and they spend 5 years on it, and they master it. They master even how can be potentially the interaction with the clients that we don't believe we can do it, right? And it will take too much time, too much energy, and we'll not be able to focus on the client again. So very open on this, and we keep always looking for solution, right? To be able to cover the full spectrum of services that people are expecting on both retail and commercial bank.
Very interesting, Olivier. So I think let's ask a fintech. Raheel, you've been mastering a lot of interesting fintechs, and Codebase is one of the biggest, which is built not only a digital bank but also a core banking. So if you can just give your perspective on how has been your experience in building this journey, and how have you seen this leveraged by your global clients?
So in terms of fintech ecosystem, they are at the heart of everything. Whether we are building neo challenger institutions or whether we are coming up with traditional institutions, taking them digital, the fintech mindset, the fintech ecosystem, we as a B2B fintech solution provider are basically at the heart of everything. The journey has been tremendous for us as well, with the partners like Olivier, Zein, KFH. We have gone beyond what traditional technology players have even achieved in a very short span of time. So the ecosystem play, even at our level, has been to focus on certain areas within technology as well. So we also don't do everything in technology. We focus on certain elements, the backbone of the digital neobank, and then we partner up with other institutions, other fintechs to add capabilities for a neobank. So that is the overall fundamental construct, even from a technology perspective, is to look at ecosystem play. As Olivier rightly said, why do we want to spend 5 years building something where people have already invested and they've already mastered that thing? We can bring them to our platform, we can bring them together, we can orchestrate it, and we can package it in a way that a challenger institution can offer the best of the services to their customers. So pick up everything from what customer wants, perfected by those fintechs, and we bring them to our platform and offer it to our customers. So we are also in the same thought process and mindset of making even challenger institutions simplified. Why you'd want to basically build everything on your own, where we can actually bring in different technologies together. And that's where our role is important, where we are able to give that confidence and give that support, the agility, the nimbleness, the flexibility to neo challenger institutions, where they can actually connect, plug and play with multiple fintechs without doing all the efforts. And we simplify the process for the institution. So that journey has been tremendous from my personal perspective, from our team's perspective, from the organization's perspective. And with my experience on sitting on different boards of different fintechs, I feel that the ecosystem play is that one disruptive change which will hit everyone. And it has hit in the retail side. You look at retail, you look at healthcare, you look at other industries, they've already disrupted it. So ecosystem play is something which the banking industry did not pick up, and the fintech industry actually mastered that.
Very interesting. Coming to the last topic, and I think that's the crux of all of these, the whole customer and his interaction with the bank, let it be a traditional bank or a digital bank, is shifting. And it's very clear out of references, it's very clear out of need. Olivier, when you look at this model, and you've seen it 3 to 5 years back, when nobody had seen a digital bank, to what you see now, how do you see in a post-COVID era, this is shifting for next 3 years? And how would customers interact with the bank going forward?
So really what we see is that following the COVID, right, a tremendous acceleration. And everybody is now used to to mobile phone, right? And I say, you know, nowadays when you want to book a trip and travel to another country, it's like having a crash course on digital, because you need to, it's even more complex than opening a bank account, a private bank account almost, because you need to upload your password, your passport, upload your vaccine, upload your PCR test result, to ask, I don't know how many people for authorization to travel and so on. So I think it's there now. People are very, very familiar, even older people, right? You go to a restaurant, you have to get QR code to look at the menu. And one of the best things is when you take a taxi nowadays, in the past, you have always the excuse the card reader doesn't work, or I don't have a card reader. No, 100% now you are able to pay with card or with the phone. I think since the last year, I never got a taxi driver refusing a payment, a digital payment. So it's really there, right? It's kind of what was very slow is moving. And I see now we are also almost already behind, because now you know, moving obviously in many areas on DeFi, decentralized finance, moving into crypto, and there is more and more experience of people who told me that they have been traveling to some countries and they bought a phone, and the vendor asks them to pay by crypto, because he has a wallet, he doesn't need a bank account, and because he saves the Visa 3% or 4% MasterCard or whatever it is. So it's moving very, very fast. And I think the challenge is to keep pace, right, with the digital transformation that is transforming exponentially every day as we speak.
Interesting, interesting. So we have 6 minutes to go, and I think I have good 30 questions from audience, which is like amazing. I'll try and do my justice to at least 3 or 4 of them. So I think there's a question, Zein, for you from Kyle. And the question is, given that you represent a traditional bank in the Middle East, and especially in Jordan, how do you plan to overcome a lack of trust barrier of a Jordanian customer, because people tend to trust bank and not trust neobanks, right? That's the general belief.
The immediate answer that comes to mind is that this is not today. This was a couple of years ago. As we were addressing the difference and the changing patterns and the drivers to change and customer behavior and customer needs, and specifically when we talked about millennials and Gen Z, and the loyalty. This also comes with, it almost answers the same question of trust. So we trust Netflix, we trust Facebook, we trust Uber and Careem. We even trust those local imitations or local alternatives to these big brand names. So yes, the brand name today maybe is becoming more valuable than the institution itself. This is one thing that I can think of. The other thing is to the point that Raheel made in his presentation about security. Actually, although at the face of it, we might think that there's a correlation between going digital and letting go of certain security measures, the fact of the matter is we are able, through technology and availability of data and regulatory pressures to put in place even more stringent controls that would protect the customers from anything from fraud to cybersecurity to cybersecurity and all of that. So I would say that there's already part of the change is also the idea that trust is no longer a major factor in the decision-making process.
Very interesting, very interesting. I think that brings me to your second question, Olivier, for you. And it's anonymous person, but person's question is, personalization is a key to digital banking, and it's very clear for customers' convenience. How do you see one consistent experience from a tier 1 bank or a bank like Zand? How would it make a difference in personalization to customer?
it will make a differentiation in several aspects, right? One on a product or offers you can bring to the client, obviously, making sure you are able to link the right product to the client. And always take an example, right? I'm a client of a traditional bank that I'm not going to mention, and for my birthdays, they always send me a voucher to go to a spa. And I've never been, as you can see, to a spa in my life, right? So, but I buy guitars. I never receive any voucher to go and buy a guitar or something, right? Or something related to music, for example. So that, I guess, personalization is very important to be able to really, and it's simple, contextual things, right? We have all the data, for example, of citizenship of people. It's very simple to tell them, okay, we realize you're Australian. If you want to transfer money to Australia, you have a discount on it. It's never happened. And it's very simple. And it's what the new digital player do. They do that very well, right? The other aspect is from a risk management point of view, that is going to benefit the client as well. Because you understand better the risk, you're probably able to provide a better loan rate to the client than any other bank. So it's going to benefit at many levels, and for this, obviously, you need to build a very strong data platform. As well, the last point is that when you talk about digital, we should never forget the human side of it. So for us, the emotional aspect is very important. So first, while we are digital, we set up a call center. Because we think that when something goes wrong, someone needs to be able to talk to a human being. There is some stuff you can do with a chatbot, etc. But usually when you reach that level is that it cannot be really scripted. So you need to talk to someone. And what you need to do for this, we need to make sure you hire people who are able to use judgment and take decision and empowered, that's one. But to be able to use judgment and take decision, you need to provide them the best tool. So that's why we invest a lot of money to give, and Raheel knows about it, right? To be able to connect the people in the call center with real-time data information at 360 degrees about the client. And obviously the system platform, a data platform, which is more expensive, is called ODS, is real-time. But we thought it was so important that if someone call or contact us via chat, the people in the call center will have the full information and not need to say, okay, let me check. So that's very important. So that's how we are going to personalize in our process, in our risk, and also it will be very visible to client when they get access to product.
Interesting, very interesting. I think the next question is from Abdul Wahab, and his question is quite interesting, that we see globally most digital banks are going into losses and relying on PE funding, but they're not really generating their own profits, and customer acquisition is the only focus. How do you see this going forward in next 2 to 3 years?
So I will just say for us, right, maybe Zein after can answer, but we have the chance to launch retail and corporate at the same time. So on the retail, the business model is different, slightly different. It's really about the Alibaba style, right? First 4 years you acquire clients, then you start monetizing year 4 to 7, and year 7 to 10 you improve the ROE, and year 10 you reinvent yourself and create another product. That's one side. It's more about valuation, about customer experience. In this area, we may have an advantage because all shareholders have a lot of employees. Obviously, all employees of the shareholder is not mandatory for them to join us. They will join us only if they love us, but it's giving an advantage to be able at least to be able to engage with them. And we have also the corporate side where the profitability can come faster because we're already talking about bigger ticket size, we do an ecosystem link financing, which is a new version of supply chain finance where we should be profitable much faster as well. So with this kind of balancing between the two businesses, it should give us allow us to reach profitability in year 3 or 4.
Interesting. And Zein, do you see it very different from profitability perspective at traditional banks, or do you have an equal pressure?
Not at all. I completely agree with Olivier, and we've seen models where it was more of an acquisition game at the beginning and then monetizing what you have, and other models where it was more niche, targeted, focusing on monetizing day one. So it really boils down to the business model, the way you're set up, whether you have an incumbent bank supporting you or not, and with that, whether you are looking to set up the neobank as an acquisition play or as a conversion play. So are you starting with a critical mass that you're converting to digital? Is it the traditional bank's strategy towards digitization, or is it really setting up a business standalone? So it really depends at the end of the day at the strategy and the business model.
Very interesting. So I'll just take the last question. I think we've run out of time, but Raheel, question is for you on how do you see the role of AI or ML technologies in KYC or any of such digital banking value chain transactions?
So in our view, artificial intelligence and machine learning is becoming the base of how we process data, how we analyze data, and how we utilize data at the right time. With the advent of metaverse and all the virtual reality all around us in a digital world, this is becoming very important, and it is applicable across all of those elements, be it KYC, understanding transactions, understanding behaviors, how customers are transacting with the customers or with their own cards, or where they're paying. And as Olivier mentioned, you should be able to tell where I am spending my money and be able to identify my patterns and my behaviors. And AI and machine learning is actually geared for delivering that promise to the technology elements where challenger institutions can utilize data because they're already capturing. They want to utilize, they want to process, and they want to take decisions based on that data and basically make recommendation based on that. So AI and machine learning is a fundamental where we are looking at very holistically across the segment, not just from just the KYC perspective, but the entire value chain of delivering data-driven digital services.
Very interesting. Thanks, Raheel, and thanks, Olivier, Zein, for sharing very, very interesting insights on your real-life building of a digital bank. And we wish you all the best for your launch, and looking forward to great successes. And Raheel, wishing you many more digital banks.
Thank you very much.
Thank you, everyone, for being a wonderful panel.